Morning students, now I'm going to take your accounts class, and you know that we are on the chapter retirement and death of a partner. In my previous lecture I discussed with you how to adjust the capital under three cases. So my today's topic is all about how to compute, how to adjust the profits and all such items in case the partner retired during the accounting year, not at the end of the year. So for this, see learning objectives, key terms, retirement during the accounting year, methods. First of all, key terms. Number one key term, sales turnover. So for example, the sale for the year ending 31st March 2019, 12 lakh. So at the end, your sale 12 lakh is to be considered as sales turnover. Sales turnover is the total amount of revenue generated by a business during the calculation period. Second key term, average profit. Like see here, how many years provided to you here? 4. 2014, 15, 16 and 17. And profit, like in case of 2014, 2 lakh profits, in 15, 2 lakh 35,000 profit, in 2 lakh, in 2016, 3 lakh, and in 2017, 2 lakh 75,000. Now here the point is how to compute average profit. You know that total profit of all years divided by number of years. So here 2 lakh, 2 lakh 35,000, 3 lakh and 2 lakh 75,000 divided by 4. Number of year 1, 2, 3 and 4. Your average profit here 2 lakh 52,500. The profit earned by a business during the previous accounting period on an average basis is termed as the average profit. Now the next, profit and loss suspense account. A profit and loss suspense account is used to record some fictitious profits. Fictitious means not real. Profits for the purpose of settlement of share of profits to a deceased partner. Later such errors are identified and rectified and accordingly adjusted in the books of accounts so that the balance of the profit and loss suspense account is 0. So firstly, all the fictitious profits recorded in the profit and loss suspense account later adjusted in the accounts books, and at the end your suspense account balance 0. Now current financial year, you know that 12 months started from 1st April till 31st March. Current financial year is basically a 12 months period starting every year from 1st April. It is different from a calendar year. So for every current financial year, you need to see 12 months from April. For example, for the year 2019 financial year is 1st April 2019 till 31st March 2020. So my today's topic is all about the retirement during the accounting year. So in between the year when the partner retired, retirement during the accounting year. In this situation, the retiring partner becomes entitled to the share of profit of current year up to the date of his retirement, beside other appropriations. The entry is passed as follows. So here are two cases provided to you if there is a no change in the profit ratio of continuing partner. So first case is when your continuing partner profit and loss ratio not changed. Then your entry here is journal entry profit and loss suspense account to retiring partners capital account. Here debit all losses and credit all income. So here rule applied, debit all expenses and losses and to retiring partners capital means credit the receiver. If there is a change in profit and loss ratio, so if your ratio change of the continuing partner, then the entry here is continuing partners capital account to retiring partners capital account, debit the receiver and credit the giver. Now methods, two methods available. Number one method for this, C, profit share of retiring partner from the date of the last balance sheet to the date of retirement can be calculated by any of the following two methods. Two methods available on the basis of time and on the basis of turnover. So first method, calculation of profit on the basis of time. Under the method, profit is assumed to have arisen uniformly over the year. Suppose, now see with the help of one example, first method, profit for the previous accounting year was 2,40,000 and a partner retires after 3 months of the current accounting year. So last year profit here 2,40,000 and the partner in the current year retired after 3 months. So profit for the 3 months of the current accounting year will be, see, 2,40,000 multiply 3, total months 12. So 60,000 3 months profit. Now if the partner's share is, retiring partner share is 1/3. So here the share of retiring partner 1/3. Then compute the share of retiring partner. So profit total 60,000. 1 divided by 3, 20,000 share of retiring partner. It may be calculated on the average profit of past few years. In this situation, the steps involved are as follows. The steps involved in the calculation of profit based on the past profits are, so number one step here is calculate. So here you are going to follow the steps according to the base here, on the basis of past profits. So first step here is calculate the average profit based on the past year profit as a grid. First of all, average profit. Calculate in first step average profit. In second step, calculate profit for that particular period, from the beginning of the accounting year to the date of retirement on the basis of average profit. Likewise, in our previous example, profit 60,000. In third step, calculate the profit of the retiring partner on the basis of all profit sharing ratio. You know that now here in my previous example I discussed with you. See here, second step 60,000 profit here computed, and the next step retiring partner share profit 20,000 computed. So in this way, on the basis of time, you can calculate the profit. Now the second method, calculation of profit on the basis of turnover. The steps involved in the calculation of profit from the date of last balance sheet up to the date of retirement based on the turnover or a sales. So here steps, number one step, ascertain the sales of previous accounting year. First of all, find out the previous year sales. Second step, ascertain sales from beginning of the year up to the date of retirement. Now the second step here is, now compute the sales from the beginning till the date of retirement. In first step, just find out the previous accounting year sales, total sale here only from the beginning till date of retirement. In third step, ascertain the profit percentage of the previous accounting year. So here you are going to compute profit percentage. In fourth case, apply profit percentage on the current period's turnover or sales. Now here in fourth step, firstly in third step, you computed percentage profit. Okay. In this, apply that profit percentage on the turnover. Okay, on the sales. Fifth step, determine the profit share of the retiring partner on the basis of all profit sharing ratio. Now with the help of one example, see the steps. Let us take an example for the better understanding. Turnover or sales for the year ended 31st March 2019, 12 lakh. So your last year sale here provided to you, sales 12 lakh. Profit for the year ending 31st March. So here 2018 31st March, last year profit also given to you 2,40,000. So the next point is turnover or sales for the period 1st April 2019 to 31st June 2019. So in this case, see student, in first step, your previous year sales 12 lakh, your previous year profit 2,40,000. Now your sales from the beginning till the date of retirement 4 lakh given to you. Partner Arun having 50% share in the profit retires on 1st July 2019. The person retired on 1st July 2019 and the share 50%. Okay. His share of profit will be calculated as follows. First of all, first step here is profit percentage of the accounting year ended 31st March. You know that how to compute the profit percentage. First of all, profit divided by sales multiply 100. Now the profit here is 2,40,000. Sale, check out the sale, 12 lakh divided by 12 lakh multiply 100. So here profit percentage 20%. Profit for the period 1st April 2019 to 30th June 2019 from the beginning till the date of retirement. Then compute sales already given to you 4 lakh of that period. Multiply 20%. So 80,000 profit. Arun's share of profit 50% means 80,000 50%, your 40,000. Your retiring partner Arun's share 40,000. Having determined the profit share of deceased partner, pass the journal entry as follows. In this case, how to pass the journal entry? See students, when the profit sharing ratio of the continuing partners does not change, you know that if not change, then simply profit and loss suspense account to retiring partner with profit share of retiring partner. The balance of the profit and loss suspense account is transferred to profit and loss appropriation account at the end of accounting period. Till the adjustment, profit and loss suspense account is shown on the asset side of the interim balance sheet, where share of profit of retiring partner is adjusted. So simply students, if your profit and loss suspense account, then asset side balance sheet. Okay, when loss of retiring partner, then shown on the liability side of the interim balance sheet. When the profit sharing ratio of continuing partner changes, so here the point, when profit sharing ratio changes, then continuing partners capital in gaining ratio to retiring partner. Adjustment with regard to share of profit from the date of last balance sheet to the date of retirement or death on the basis of time or turnover is to be made as follows. So in conclusion, see, when there is a no change in profit sharing ratio of remaining or continuing partner, then through profit and loss suspense account. If change, then through gaining partners current account. Okay, if not change, then suspense account, profit and loss suspense account. If change, then gaining partners capital current account. Adjustment of outgoing partner, share in the profit from the date of last balance sheet to the date of retirement through the profit and loss account. See the statement, 3 partners available, Simar, Bimal and Biswas are the partners sharing profit and losses in the ratio 2:2:1. So 3 partners available with the ratio 2:2:1. Biswas retired on 30th June 2018. One retired. The balance sheet of the firm as follows. So balance sheet provided to you. See the balance sheet, land, investment, stock, sundry debtors, everything is given to you. Stock, cash in hand, sundry debtors, cash at bank, 3 partners capital, general reserve, sundry creditors. So it was mutually agreed that on Biswas retirement, land and building valued at 12 lakh, investment 1 lakh, stock 3 lakh and goodwill be valued at 2 years purchase of average profit of past 5 years. So here firstly you are going to compute the average profit and then goodwill. For this, in the statement also given to you years 1, 2, 3, 4, 5 years with the profits. So see the working note, and in your question you are required to prepare revaluation account, partners capital account and balance sheet as at 30th June 2018. So first of all, see the working note. Calculation of goodwill. Average profits given to you. See the profits. 5 years profit 2 lakh, 2 lakh 35,000, 3 lakh, 2 lakh 75,000 and 3 lakh 25,000. See, total profits of 5 year divided by number of year 5. So goodwill, first of all, average profit here is 2 lakh 67,000. Now find out the goodwill. In the statement given to you, 2 years purchase of average profit. So it means 2 years for goodwill. Then see 2,67,000 multiplied 2 years purchase year. Now your goodwill 5,34,000. Biswas share of goodwill is equal to 5,34,000 1 divided by 5. Now the retiring partner share is 1,06,800, which is contributed by the Simmer and Bimal in their gaining ratio 1:1. Now the next point is calculation of Biswas share of profit based on last 3 years. So if on last 3 years, then see last 3 years in the statement. 3 lakh, 2 lakh 75,000, 3 lakh 25,000. So in this way, see 3 lakh, 2 lakh 75,000, 3 lakh 25,000 divided by